Good morning, folks, and welcome to Stock Charts Today. This is Bob Desmond, and let's kick things off with Netflix. Of late, we've seen earnings out of the banks, which has resulted in a sell-off of the shares. Last week, JP Morgan, Citigroup. Yesterday, Bank of America, which did close positive. I'll go to that chart in a moment. But when you see selling on a beat of the headline number, that's somewhat of a tell. So what I'll be watching today is Netflix. We are rallying strong on earning news. Will we close out today holding those gains, or do we sell off? If we sell off and we see the same behavior in Netflix as we did with the banks, then you are already in this earnings season see a theme forming, meaning traders are selling strength. They are selling the news event. So no doubt a great reaction in Netflix shares. The question is, will they hold the gains? And that's what we'll be watching. Taking a look at Bank of America, you can see that yesterday we rallied and we sold off into the close. Not necessarily the best price action that you'd like to see. Now, members, we're going to segue into a quick morning update, and we're going to review our positions, those positions that we put on, and our current positions in a moment. Let's just get through the pre-market activity, and yes, I do have a couple of stock chart requests to get to. So Bank of America is up in the pre-market, as are the Dow futures. They are up triple digits. Remember yesterday morning I mentioned watch out for this pennant formation and a possible breakout on the Dow, and on the S&P 500 watch for a breakout of this bull flag formation, and we got it. The problem here is that while both the S&P and Dow are higher this morning, we're at resistance. So the question is, with the light volume that we saw yesterday, do we have the rocket fuel to press through these resistance levels? Now, the headline news is coming out somewhat positive. We have favorable earnings. The Nasdaq, same deal here. We're pressing higher. We were above a support level. At current, we're down below it. We have not closed down below it yet, so it's a watch only. We can't draw any conclusions until we close out this trading period. But right now, we are down. Up on the morning, but down for this 4-hour period. Taking a look at the U.S. dollar, it's picked up strength over the past several minutes, but a rough night overnight. We took out the lows seen last Wednesday, and that put us at a new weekly low. So we have a new week-over-week low on the Dixie. We remain on a weekly basis in a tight trading range. Now, you'll remember yesterday morning we rallied out of this wedge formation, and we flashed a bearish key reversal, and here we are today. But again, we're rallying right now, and when you take a look at gold, gold is so strange, gold in the miners. It may rally on a pullback on the dollar. It'll definitely pull back if the dollar rallies. It's very strange. We're down $6 on the session. Now, the key to remember about gold, here's a weekly chart. We are very close to a major breakout on gold. So while we're chomping at the bit to go buying gold and adding to our gold mining position, which we did quite well with last week, we're going to wait for the breakout. Members, more to come on gold. All right, now let's segue into members' stock chart requests. This is where we review the symbols that our members submit for me to review. And the first chart up is TCP Pipeline Partners. We booked profits in TCP yesterday. This is an extreme oversold trade. If you want me to do a post-trade review, much like we did with DPST the other day, going through our logic, rationale for accumulating a position and booking profits, let me know. Leave a comment below if you're watching this on YouTube, or if you're watching this on StockTwits Twitter, leave a note there. Or if you watch this on the website, send me an email or leave a comment on the blog post. So for fellow member John, he asked, why wouldn't I consider this an investment at this point in time? The reason is, and the reason why he asked that question is that I sent out an alert, and I mentioned over the weekend that this would not be an investment. We would look to book profits quickly. Why? This is pure speculation. We have no validation yet, as we did back here in 2016 that this support level would hold. We could speculate that it would hold, and it was a good and accurate speculation, but there's no real promise that it's going to hold. Now, what we're looking for, daily chart, would be a pullback and a retest of, even if it undercut the prior low of $30.34, a retest of $30 per share, or we pull back and we put in a higher low. Now, by virtue of the fact that we booked profits yesterday, does that mean that the shares can't move higher? They can most certainly move higher. The energy sector is very strong right now, but it's a bit extended. If we manage to rally up and through 33.38, I think we could go up to 35.76. But what I'd be looking for is a pullback, a higher low, and then a continuation move higher. Then I would consider, especially if it's on a weekly chart, then I would consider opening up a position longer term in TCP pipeline. But not right now. It was a speculative play, betting that we would get a dead cat bounce. We got that dead cat bounce. We got it on rising volume. And again, I'm not saying that the shares are going to drop. They could rally up to 35.76, but in all probability, they're going to stall at that level because you have a lot of overhead supply there, and they're going to roll back over, and you're going to get a retest of recent lows. That's all good. That's a good thing. That's what you want if you're thinking about buying the shares as an investment. RSI is rising, Stokes are rising. Just beware that you have resistance at 33.38. If you have a profit from the recent lows, scale out a little bit. Book some of those profits. The next chart up, HTA, Healthcare Trust of America. Weekly chart. It's a stock that is in consolidation. We have a confirmed breakdown. We have lower highs. We broke down below 28.04, and we put in lower lows. We're holding support, last seen back in November of 2016. I would think to buy the shares on a retest of support with a stop right below 24.76. I would look to add to my position on a rally and a close above this upper band of resistance. And if we close above 26.66, I would add more to that position. I would buy on strength. But right now, the path of least resistance is to the downside. Daily chart. Now, on a daily basis, we broke out here on March the 28th, rallied, pulled back, retested the breakout point, and then rallied yesterday. I wouldn't condone buying the shares today because we closed right at resistance. Now, if we close above 25.50, then you can pull the trigger. But remember, you have overhead supply right up here at 26.56. But I would look to add to my position on a close above 26.56. But I would not go buying into this resistance level right now. Volume yesterday was good. It rose. Next chart up, Las Vegas Sands, weekly chart. We have a breakout this week. Members, we're going to be talking more about this one in a moment because we may be looking to put on a trade very soon on LVS. We have RSI, which is rising, as are the Stokes, but still down below 50, which is a concern. But a really nice consolidation, holding up well in a very volatile market. Sonesta Technologies, very similar to Las Vegas Sands. A doji star formation so far this week. I think we're moving higher. Members, let's segue into a quick morning update. Everybody else have a profitable trading day and be well. Okay, folks, let's pick up where we left off with Las Vegas Sands. Again,